Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. A number of you have asked me to do some reaction videos to some of the other YouTube Tesla videos that come out. I'm not going to say how many that number is. It's not very many, but just know that I do read your comments and I appreciate them. I came across this video this morning, and while I've been hesitant to do the reaction videos because, one, I'm not a Tesla expert, and I don't know, I think reaction videos are better off. If we're going to be commenting on them, we got to do it in our area of expertise. So this video has to do with Tesla, it has to do with the stock market. I'm not an expert on the stock market either. So what am I doing a reaction video for this one? Well, as I was watching it, I had a number of different thoughts relating to where I do claim to have a little bit of expertise in, and that's cash flow. So let's check out this video and see how it goes. Keep in mind, this is my first reaction video. Hope you get some value out of it.
If you had $300,000 available to you Monday morning, would you place a bet, all of it, on Tesla? Would you do that? In this video, I'm going to address that scenario, and I'm going to explain to you why that scenario came up. Friday night at 5:20, my phone rang. It was a call from Frank. I had never heard from Frank before, but Frank explained that he was a member of my tribe, and he had a question for me. And would I take a few minutes to answer his question? I always do. I always answer my phone, and I always speak to the members of my tribe. My tribe is Best of Us Investors. We're a group of right now about 50,000 people who have come together as one to become better investors. And we share our ideas in our village. Our village is a Discord. If you want to be invited to the village and share in our knowledge, go to bestofusinvestors.com and join us. So let's get back to Frank. Frank's 50 years old. He's married. He has 2 children.
That reminds me, we're in the process of starting a Discord channel ourselves. So keep an eye out for those details. The other thing I wanted to mention is this next week is the week before Battery Day. We've got a lot of hype coming up for the Battery Day on September 22nd. So what I'm going to be doing on this channel is we're going to be live streaming the market every day this week, at least 5 hours. And then on Friday and the following Monday, we're going to do all day. So we don't know what's going to happen to the stock. We don't know which way it's going to move, but we're going to be there for it. And we're going to have some good discussions, and we're going to be able to talk Tesla, watch the stock, and see how it goes. So feel free to join us. Be sure to hit the subscribe button, click the bell so that you get a notification when we get on and do our live stream.
Children. He has 1 grandchild. He owns his home free and clear. And that's the important part of it. Last week, Frank went to his bank. He asked the bank for a HELO. A HELO is a home equity line of credit. Frank's house is worth somewhere in excess of $400,000. So the bank said, yeah, we'll lend you $300,000. And we'll lend you that amount because if we have to foreclose on you, we know we got a quick sale to cover what you owe us. And so Frank had.
So regular viewers of my channel know that I love HELOCs. Haven't heard it called a HELO before, but home equity line of credit. We call them HELOCs on this channel. And they are a great tool for eliminating debt or accelerating the growth of your wealth. So Frank seems like he's off to a good start.
When he called me at 5:20 on Friday night, $300,000 at his disposal, and it was his plan, or is his plan, to put it all on Tesla on Monday morning. Okay? So Frank asked me the question. And I'll ask you the question. Would you do it? Would you put $300,000 and your house as collateral on Tesla Monday morning? Well, I want you to go down into the description right now and answer one of two ways. Yes, Frank, go for it. I think it's a good bet. I think you're going to do swell. Or, no, Frank, don't do it. Don't do this thing. Okay, so you've done that. Now I'd like to go to the charts and see if we can evaluate what Frank is looking at and what possibly could happen with Tesla.
So feel free to put your comments in the bottom of this video. Go to his video. I'll put a link to it in the description. And let me know, what would you do? What are your thoughts? Should Frank do it or not?
And see if we can't figure out what the risk and return on such a play would be. Okay, let's go to the charts. Here's what Frank's looking at. We go back to our March chart and we start and we see that Tesla's had a channel that it's traded in, and it hits its highs or gets close to them, and then it retreats. And then it hit a low here on August the 11th, August the 10th, and then it just took a rocket shot all the way up to about $400, $500 a share on September the 1st. And then, as we have seen in the last 11 days, the bottom just fell out of it. And it has come down and actually went through the trading channel, the low side of the trading channel. Looks like it got down to about 330. And then it's made a slight climb up, got back into the trading channel, and it closed at 372.72 on Friday. So Frank is saying, where's this going to go? Is it going to drop down below again? Or is it going to climb right back up and surpass its past high? And probably Frank is believing that it will go up above $500 a share within the next month, month and a half. I guess it really doesn't matter. So let's look at.
Now, we know that the most exciting thing coming up is Battery Day on the 22nd. So most likely Frank may not have to wait a month, month and a half in order to see where a potential investment may go. He might get his answer pretty quick. Month, month and a half is quite a bit longer time frame, I bet, than Frank was initially thinking about when he specified Monday morning. Just my thoughts, though.
At the finances of this and the risk and reward, and lay it against what Frank has to gain and what Frank has to lose. So Frank's question to me was, Kerry, should I or shouldn't I do it? My answer immediately was to Frank, I can't answer your question. You see, Frank, although I was a financial advisor and I was commissioned to give people advice in the states where I'm licensed, I can't answer that question for you. If I did, and if it turned sour for you, and if you recorded this phone call, you could go to the Securities and Exchange Commission and send me to jail. So, Frank,
Now, I can appreciate his position. As you know, my area of expertise here is life insurance as well. I'm a licensed life insurance broker, and I am not securities licensed. So I can't give you advice on stocks either, or the market, or whether you should invest or shouldn't invest. But what I'll often do is I'll tell you about my thoughts or what I would do if I was in that situation. And that's where we're headed here.
Can't answer your question. But let me ask you this. Do you have any other questions you'd like to ask? And we moved back and forth on that until Frank got the drift. And he said, Carrie, would you do it? Would you put $300,000 of your money on Tesla Monday morning? Well, Frank, I run my life based on risk and reward. So let's look at the risk of doing such a thing and the potential reward. And let's look at the numbers. So with 300,000 at $372 a share, I'd be able to buy 800 shares of Tesla on Monday morning at 372. If what I think or what you possibly think is going to happen is in 30 days, it'll be back up to $512, I'll make $140 a share and I'll net profit of $112,900. Now I'll have to pay the $1,000 interest on my $300,000 loan, figuring at 4%. So I'll net somewhere around $112,000. Okay? What does that mean?
So that's a good way to anticipate the potential gains here. The thing to remember with the HELOC is if he is only going out about a week, just over a week, you pay interest on whatever the daily balance is. So rather than it being $1,000 worth of interest, it could be substantially less, maybe closer to $200, $250. If he just gets in and gets out somewhere around Battery Day. Now, there might be something else that he's looking forward to in the near future where he sees a potential gain that's higher than that. But it sounds like this is a really short-term play on his part. And really, when it comes down to it, the cost of borrowing that money really isn't going to play a big factor in this overall when you look at the potential gains compared to the potential losses.
As a reward, will the $112,000 change my life? Well, I could buy a new Porsche. Yeah, I could buy even a hopped up Porsche because I could trade the one I got in and I could get a new one. I could remodel my house, which it needs to be done, and probably pay for that 2-week trip that Nita and I are planning to go to Ireland next year after the pandemic's over. And it would certainly pay for the 2-week trip that we're going in November to the beach like we have for the last 30 odd years over Thanksgiving. So there is some reward there. Okay.
The way he kind of sets up the framing on this, I would provide a little bit of pushback. I don't think that we need to go into whether or not to make decisions like this as to whether it can change your life. Really, when we work on building our wealth and growing our wealth, it's not going to happen in one shot. It's going to be a series of good moves that we made along the way. Now, really, maybe for Frank, this situation is like a moonshot for him, where he's never done anything like this before. He may never do anything like it again. And he's kind of putting all of his chips on the table. And that's kind of the way that this is being set up and framed as. And I don't think the risks are ultimately that great, but let's keep going and we'll see where he takes us.
So then, what's the risk? The risk is that Tesla moves lower and it stays lower and it trades sideways for the rest of the year. And I lose money because it went lower. And I pay $1,000 a month in interest. Okay, but yeah, Carrie, but it'll go up after the pandemic is over.
I would agree with his assessment of the risk here. I think that's a pretty good outlook on it, assuming that if he doesn't get the returns he's looking for here in the short term, that he'll hold on to it, expecting they'll come later on.
Over and all that. Yeah, it might, but it might not. If Tesla crashes, on the other hand, and I have to bail and I lose $100,000 and I've been in it for 6 months and I owe the bank $6,000 of interest, and I got to raise $100,000 to get out of that loan.
Now let's consider that situation. And this is where I think maybe it might be, again, pulling on the extreme the other way. On the one side, he's saying, is it going to change my life? Is this a decision that the financial upside could change my life? And then on the downside, how low can it go? Now, $150,000 or $100,000 loss would be approximately a $140 drop in the share prices, which means we would be down in the 240 range, or close to half of what it was after the split. For those of us who've been following this stock for a while, that seems highly unlikely. Doesn't mean that it's not possible, but it does seem highly unlikely. And if it's on the way down that low, something major would probably have to happen in order to get us to that point. Again, I think that this is probably more of a short-term play for this guy, and he doesn't need to wait 6 months in order to decide whether or not to cut his losses on this effort. I'm guessing he's got about a week and a half where he can make that decision. So if we shorten up this time frame quite a bit, I think the potential losses could be quite a bit lower in my estimation.
Oh, well, that's not too good of a scenario. I think the other thing, Frank, that is most important, I would be putting my home in jeopardy for a stock trade that I have no control over the situation. And more important than any of those things is the suffering, the pain, the anguish I would put myself in, and eventually I'd have to tell Nita, and the pain and suffering she would go through, and the disgust she would have for me putting our house in jeopardy over some damn stock trade. I couldn't live with myself with that. I just couldn't live with myself. So what are these situations I said that I don't have control over? I don't have control over the growing market fear that has penetrated the NASDAQ market over the last 2 weeks. I don't have any control over that. I don't have control over traders moving away from the stocks that I believe so strongly in, the big six and Tesla. I have no control over that. I have no control over what's going to happen in the presidential election, and that is going to have a big play on what happens over the next 3 months in this stock market. I have no control over the relationships with China and how that's going, because I'm seeing we don't want you in our country collecting data. Well, we don't want you in our country collecting data. Well, we don't want you in our country. It's becoming a pandemic of its own, and I have no control over it. Will there be a vaccine, or won't there be a vaccine by the end of the year, or the next 6 months? I have no control over that, and that's going to affect my trades. It's going to affect the stock market. Will there be another relief package? That's going to have an effect on Tesla stock and my 300,000 and the putting my house in jeopardy. So I don't have control over that. The list goes on. And add it to that list. If I did this trade, Frank, what if something happened to me? What if this trade sat there while they were burying me, or while I was in the hospital being treated for the COVID virus, and Nita didn't know a damn thing about it? Because if I'm going to do this, I'm not going to tell her about it, because she'll shit if she believes that I'm putting our house in jeopardy for a stock trade. So there's just too many things I don't have control over that would say to me, Frank, my answer to you, Frank, of your question, would I do this trade? No, I would not.
So a lot of things to unpack out of that portion. To be clear, I'm not going to make a recommendation one way or the other as to whether Frank would do it, Frank should do it, or if I would do it, because I don't think we have enough information. First of all, as a financial consultant, I don't have enough information to make a recommendation one way or the other on his overall financial situation. So we're only getting a very narrow sliver of what his financial situation entails. And one of those things is he's got a $400,000 house that's paid off. He's got good enough credit that he can qualify for a $300,000 home equity line of credit. That's a large line of credit from institutions, especially at this time of year when we're dealing with the pandemic and credit has been tightening up a bit. And some places have been stopping lending out lines of credit altogether. So that tells me a few different things. It tells me he's likely got good credit. He probably has a good relationship with that bank. He's got the paid off house. He had the ability to pay off that house, presumably through his day job, whatever his regular income is, maybe with side jobs, maybe he owns a business. We just don't know. Maybe it was through trading. Maybe he made some trades early on in his career that allowed him to have excess funds that he could use to pay down his house. Maybe he does something like dynamic banking, where he utilizes lines of credit to help pay down debt, grow your wealth, and have that offset interest that really maximizes his cash flow. We only know some of these things. We don't know enough about his overall financial situation. But with what we do know, I think it's pretty safe to say he's probably not risking his house with this move. I'm sure there's stories out there, plenty of stories out there of people doing that, of people borrowing, making a big trade, and not being able to cover the losses and having to deal with those ramifications. If he's going to take that $300,000 and leverage that with options, and suddenly he's at risk for way more than that, that would be a different story. That would be a much different story and a lot different level of risk that we would be talking about. It doesn't sound like that's the case according to the scenario put forth here. Now also, I can appreciate all of the things that he says we don't have control over and how he thinks about that in terms of his investing. Nearly everything that he mentioned is months away. So we've got to look at what is the length of play that Frank's considering. Is it a 6-month play? In which case, there's a lot more risk in what other investors are or aren't doing. There's a lot more risk in whether we get a vaccine in a timely fashion. There's a lot more risk in regards to the election coming up. Almost everything that he mentioned as a possible risk is a much longer time frame than potentially a week and a half, where we could see some significant price movement based on Battery Day coming up. He said he didn't know Frank, so we don't really know what Frank's habits are. We don't know what his investing experience is. We just don't know near enough in order to give Frank advice on what he should be doing. And oftentimes in my comments, I get people asking if they should or shouldn't be doing something. Well, and almost every single time, the first question is, what's your time frame that you're working with? Because that makes a big difference when it comes to individual decisions on stocks. Even still, I can't really give advice, but I can say what I would do in a certain time frame, how I would view it, and knowing that you don't have control over all of these things. Not having control over those is offset by what he does have control over. And what he does have control over is putting his money in and taking it out of the market. And in that short time frame, I think that limits the potential losses. It also limits the potential gains, of course, because stock's only going to move so much in a short period of time. But that works on the way up just as much as it works on the way down. And if we look at a company like Tesla with its now almost $14 billion cash on hand, factories going up across the world, it's a company that is not going to go to zero in the very near future. It's a company that has a lot of people looking up, looking at the positives. And of course, it can go up and down, and it can swing wildly one way or the other. But is it going to drop in half? Is it going to lose 50% of its value? It lost 25% of its value over the last week or so. And that was the biggest drop that it's ever seen. Could that double? Potentially. Is that likely? Maybe not. Those are just things that we've got to consider when we're making these decisions for ourselves. Now, worst case scenario. Worst case scenario, in my mind, Frank loses every penny. Tesla goes to zero for some reason. Elon Musk passes away. The next day, a story comes out, or even that day, a story comes out that his whole board of directors and his management have all been defrauding the company, and it's essentially worthless. There is no cash in the bank. And I struggle to find any other things that we can say that would lead this stock price to go to zero. But let's say zero is the absolute worst case scenario. Frank's stuck with a $300,000 low interest home equity line of credit that he can pay off over the course of the next 30 years or 20 years, depending on the terms of that agreement. Now, does that mean he's going to lose his house tomorrow? No, he's already paid it off once. We would assume that he's got some type of income and ability to earn. He can just work on paying it off again. That's the worst case scenario in my mind. And in the meantime, it costs him $1,000 a month in interest. What's a more likely bad case scenario? Even on the extreme still, let's say half. Let's say it drops in half. We're at 370, so let's say 235. Price drops to 235. Now he's out 100,000. He could still cash out, pay most of that HELOC back, and now he's got a $170,000 loan that he's got to pay back over the course of the next 30 years. And it's only a little over $500 a month in interest. That's probably doable for Frank, right? I mean, it's not a situation you want to put yourself in, but it's survivable. And he probably isn't going to lose his house. He's got a $400,000 house. I mean, he could sell the house and go buy a smaller house for $240,000, $230,000. So there's options. He's got options. What happens if it drops 10%? Well, what happens if it drops another 25%? That's less than $100 a share. That means his loss would be in the range of $80,000. Now, we know that the largest drop in trading day was 25%. The odds of you having two of those within a couple week period, probably not very good, especially with a company that's not just absolutely falling apart. How often do we see that happen with ones that have a ton of upside and really intelligent people working for them and developing cutting edge technology? Probably doesn't tend to happen very often. But if it does, he's got an $80,000 loan now that he's got 30 years to pay off. And the interest he's going to pay on it, a couple $100 a month, probably less. Now that we're considering realistic scenarios on the downside, that downside doesn't look all that bad, does it? What if we get a 10% loss? $30 a share. That's about $24,000 that he could be down. If he cashes out, he's got 30 years, low interest loan, probably less than $100 a month in interest, ability to earn and pay that down some other way, that's not so bad. In my mind, I mean, you're not losing your house. That's the point of it. He's not losing his house. So when the risk is losing your house, then yes, maybe the reward needs to be, is it going to change my life? But when the risk shifts now to somewhere in the range of, oh, I might have to pay back a $30,000 to $80,000 low interest loan over the course of the next 30 years, that's like skipping buying a new car in 5 years and keep driving the one you've had. Not that big of a deal, in my mind. Not that big of a deal. Now we've got the potential upsides. And I'm bullish on Tesla. So, you know, I tend to see the opportunity coming up ahead. So me personally, I think odds are rolling into battery day that the price is going to go up. And I would probably act accordingly. But it depends on my overall financial situation. And one of the things that you can't control was very important that he mentioned. What if something happens to Frank? What if something happens to me? Something I don't have control over. Where does that leave my family if I put a bunch of money in the stock market? That's a good question. Now, for me personally, I've got that taken care of. That's why I do life insurance. I've got enough life insurance that I can take these risks and know that if I happen to pass away, all of the debts will get wiped clean and my family is going to be in a good financial position, regardless whether I lived for the next 30 years in order to keep trying to increase our wealth. I've got that taken care of, so I don't have to worry about that. Does Frank have life insurance? We don't know. How much does he have, if he does have it? It's another aspect to his finances that we don't have when we got to make these kinds of decisions. So, something to consider there. Let's see how this ends up.
Are there some circumstances under which I would be willing to do something similar to what you're suggesting, Frank? Yeah. In fact, I'm doing it. I have a HELO loan against my house so that I can build those houses I've been telling you about for baby boomers who are downsizing, who can't wait for me to get the sticks in the air and a roof over it and a kitchen put in that wazzles and dazzles them so they can come and buy it. And I walk away with $40,000 worth of profit. I'm building two of them. I'm doing it with a HELO loan, just like you're talking about. But I'm in control of the situation. I know the demographics. I know the situation that my city is in. I've received the phone calls. I've been in the real estate market for 3 years, and I know it. And so I have control. The presidential election will have nothing to do with it. Our relations with China will have nothing to do with it. Market fears will have nothing to do with it. These are baby boomers who are selling their more expensive homes, downsizing, and coming to my property. I have something they want. So there, yeah, I'll be willing to put my house up as collateral to work that side gig that I really don't have a whole lot to do with other than going and looking at it and getting excited about it. So I would do that. But
I'd say I think he's probably got a little more risk with real estate than he's leading you to believe in regards to all of those other things. Those things do make a difference because the overall economy can really factor into how those houses are going to sell. And let's realize that while he says he has a lot more control, one of the things he has less control over is how quickly he can get out of that investment. So if for some reason the election causes a problem, leads to the real estate market going bust, or people losing their confidence in that market and pulling back, he may not have the ability to get out of that very quickly, whereas you tend to have a lot more liquidity in the stock market So if you need to get out, you can get out. You can minimize your losses fairly quickly. It's definitely a lot longer time frame when it comes to real estate. Although you tend to not see the severe crashes in real estate that you do in the stock market. So while it's kind of a double-edged sword. We have seen some drops in real estate in recent history that happened fairly quickly and made it so that people couldn't liquidate. But it's not something that happens very often. And we're basically in a totally different environment real estate-wise anyways. But just know that when it comes to stocks, one of the advantages to the markets is the ability to get in and out of them on any given day with a lot of stake in hand. You can get a lot of money in and out of the markets very, very quickly.
Here, I'm in control. I'm in total control. So, Frank, members of the tribe, don't do it. Do not put your home in jeopardy. The risk and reward doesn't weigh out. And come back to that same question. Will it make a difference in my life? I was watching the TV the other day, and Publishers Clearinghouse, I believe it was, and Terry Bradshaw was the spokesman for it, and they were riding around in a car, and they said, and we're going to show up, and we're going to give you $1,000 a month for the rest of your life. Would $1,000 a month make a difference in my life? Not really. Not really. I think what I would do is I'd give it to whatever one of my grandchildren are in college at the time and say, okay, here, we'll take some of the financial pressure off of you. But if there was a risk attached to that $1,000 a month, would I do it? If it involved putting my house up as collateral for Publishers Clearinghouse, no, I wouldn't do it. The odds of me winning, first of all, are 50 million to 1. So I implore you.
That's kind of a silly analogy, I think, to use, because he mentioned right at the end what the odds are. The odds of winning are horrible, and he's talking about investing all of the $300,000 to do it, putting all of it at risk, and it's kind of an all or nothing situation. And the reward would be $1,000 a month. That doesn't even pay the interest on the loan, or it just barely covers the interest on the loan. So obviously that one doesn't make sense as far as an analogy goes. And he gets back to this, is it going to be a game changer for his life? Is it going to change your life? And again, I don't think we need to go to this extreme when trying to decide on making a bet like this. It doesn't have to be a game changer on your life. Just knowing the things that we know around Frank's financial situation. Now, there could also be other things in there that we don't know that clearly point to him running away from this idea. But at its surface level, I think we've demonstrated that the risks are not as great as we're being led to believe here.
For you, when you get these thoughts in your head, do a study and measure risk against reward and make an informed decision.
Couldn't agree more with that statement. As I've demonstrated, I think in this reaction video, I didn't even sit down and pencil any of this stuff out. These are all the things that just popped into my head as far as risk reward. These are considerations that I make all the time. And we want to be realistic about what those risks and rewards are. Let's go back to the rewards. Is it likely to jump back up to $520 over the next week and a half or even 3 months? Probably not. I mean, that may not be a realistic number when you consider how much future value is already built into that stock price. Now, on any given day, can we get back to that? Yes, I think we can, because we still are looking forward to the S&P 500 inclusion. And I think people are going to start getting back into the stock, expecting that maybe next quarter or maybe sooner, the S&P 500 could announce, and then we get a squeeze on the stock price that pushes it way up as all the indexes have to jump in and purchase those shares. That's certainly a possibility in the next few months. A lot of downside possibility with the overall economy and international relations that can affect it negatively. We know short term that it certainly could be a possibility. Now, it's really hard to time the market. I'm not going to make an argument for trying to time the market. As I said, I'm not an expert. I'm not an expert on this regard. I can't give you advice on whether or not to buy stock or not, or which stock to buy or not. These are just thoughts that go through my head when I'm doing analyzing for myself.
And ask yourself, is this going to make a difference in my life? Either way, if I win or if I lose. So, to answer the question in the thumbnail, I'm not going to be betting $300,000 on Tesla on Monday morning. And I suggest you don't either. So, if you'd like to see more videos like this, go to bestofusinvestors.com, sign up for our morning letter. And as a result of the morning letter, and that morning letter, every day the market is open, I write a letter about what I believe is going to happen in the stock market. And there will be your ticket, your link to our Discord, where you can join our tribe, enter the village, and share information with, right now, probably, I think we're up to about 4,000 people in there who are exchanging ideas and talking about things like this.
All right, well, I appreciate him putting that video together and us being able to respond to it. So I wanted to include all of those pitches that he made, just in case any of you are interested in joining his tribe. I'll certainly be hitting the subscribe button because I appreciate him getting into it and going through his risk-benefit analysis. It was solid. I just wanted to provide a little different perspective, a little shorter-term perspective that maybe wasn't so extreme when it comes to the potential downsides to it. So I hope you found value in the video. If you did, hit the like button, subscribe to the channel, join us next week as we do the countdown to Battery Day. And if you want to find out more about how you can maximize your cash flow, check out these videos right over here. And we'll see you next time.